All right, hey there. Good morning, everybody. It's a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 25th of January, 2022. In a, well, it was pretty quite. It was pretty dense fog this morning out here in Burning, Texas. Still quite overcast and cool outside, but glad to have you all along for the ride. Sorry, I'm running just a tad bit late there. Coughing fit right before, weather changes, allergies, stuff like that. So I appreciate you guys hanging around and checking in. Who's here already today? We got Teo. What's up, man? Right at the beginning, look at that. We got Jared the Greats here, Crypto Mowgli. Who else is here? Yeah, usually last in the stream, not today, Teo. That's awesome. Nevlusian, what's going on, man? Keith's here. Daniel Mendez, good morning, my friend. Let me see here. Oh, you're usually not home at this time. That's why you're usually not here till later. They're over in Romania. Okay, gotcha. Wrong side of the planet. Hey there, wind beneath my wings, or wind beneath wings. Hey, what's going on? Claudia's here. Hank checking in. Who else is here? Data's here. Devin, what's up, Devin? 51 ETH, good to see you as always. David Martins, hello, sir. Bill, my buddy, checking in from the UK. He says where our PM and his office is being investigated by our police. Party time. Oh my gosh. See, politics is the same anywhere in the world, guys. That's all there is to it. Politics is the same anywhere in the world, right? Power draws to it those who intend to use it. It doesn't mean those people are necessarily evil or bad or anything, though sometimes they turn out to be, right? But just human beings in general tend to take the easiest path. They seek to remove pain and to increase joy. I mean, these are the basic pieces of what makes us human, guys. We're lazy. We want to do whatever we can do that gets us to the greatest amount of pleasure in the easiest possible way. And along the way, we also want to do whatever it takes to keep us from pain. So, or if we're in pain, to get out of it. And a lot of times doing those things, unfortunately, ends up hurting other people. But for most people, the goal isn't to hurt somebody else. It's just to do for us, right? Things are no different in the markets, guys. And people move, from fear and greed. So from pain to joy, to pleasure, right? And, it's the same thing that goes, no matter what you're doing, guys. We're just human beings. That's the way it is. So the more you understand about that and how people act and react, and the fact that people aren't, generally evil, they're actually good, just lazy. I think that kind of helps you, not just with trading, but just in life, dealing with people. Heaven forbid you work for somebody else. You got to deal with, coworkers or, oh man, even worse yet, you've got those toxic supervisors, right? That can make life really difficult. But I think, understanding the way people are and whatever, I think that kind of helps you a bit. If anything, it helps you determine whether you want to stick around where you're at or you want to move on, right? So anyway, good to see y'all here. Who else is here? Pepe's here. What's going on? And we got this idiot. We're going to go ahead and get rid of them. Let me see here. Excuse me. Bamboo, what's up, man? Doing great. Hank says hedonism. Texas is too close to Jamaica. I don't know about too close, man. You're talking about the other side of the country there, right? Got to go to the East Coast and then, or the South area there. We're still pretty far away from it. Either way you look at it, it's down to an angle there. Let's see here, Diego. What's up, man? Let me see here. All right, guys. So anyway, yeah. Hey, listen, you can join us at howtotradetowin.com. We'd love to have you there. I'm telling you what, Tier 3 is where it's at. That's where you get everything of everything as far as education every week. You've got access to all the previous education we've done. Well over 200 hours now of educational video content, guys. 3 hours added every week. Every Monday we do a live stream for Tier 3 that you guys can, either attend live or watch it at your own leisure there. That has to do with Wyckoff. Thursdays has to do with Elliott Wave. Wednesdays has to do with tips, tricks, and techniques, where we show you, where I show you different rules-based systems to help you trade. Or we talk in depth about different indicators and different, things about trading that you need to understand. That the more you understand, the better you're going to be. So, that's just all that. And of course, hot takes and chart requests and, chart critiques and Just, man, so much stuff. But anyway, man, we'd love to have you there. There are 3 tiers you can jump on. So even just 1 month at tier 3, man, gosh, that'll put you guys so much further ahead than where you are right now as a trader. Right? Telling you. It is what it is. Let me see here. TV Canal doesn't understand what's going on with price action here. Still arguing it's because they wanted to fill the gap, but it had nothing to do with the gap. Again, that was a weekend gap. Weekend gaps are nothing special. They're normal, everyday things. They only occur because market is closed, regularly on the weekend, and so there is no special thing that draws price to them. But again, I can't. Obviously, I can't force anybody to believe that. It is what it is. But I would argue, it's not that gap. Rather, it is. Oh my gosh, what the heck happened here? Oh, what is going on with this? Wow. Let me try to reload this real quick. Okay, let's try this again. Let's jump back to that daily there. There we go. I would actually argue the reason why it bounced off this area here is because, let me see if I can put it in here now. Technicals and profile, fixed range. There we go. Let me see here. Gets right through there. Is because of this right here. It's the volume. There was nothing really here going through its way down. So it comes on down to that area there. Draws right to that. And so I would argue that's what it was. But again, I've been doing this a very long time, and I know, what's up with gaps, so is what it is. I mean, if you need to believe that, you need to believe it, but just understand that if you're always trading because you think price is going to go back to some weekend gap, you're going to be left behind many, 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 many times. Because, again, a weekend gap is nothing special. It's not a breakaway gap. It's not it's none of those other gaps. There's lots of different, well, I say lots, like 4 different gaps. But the common one is the weekend one, and usually price does not return to it, the fact that it's a gap. So anyway, just some thoughts on that right there. Hello, Tony. Good to see you there. Let me see here. Bianca, what's up? Data's here. Esteban, what's up, buddy? Oscar checking in. Mark said, missed the stream and I couldn't miss 2 in a row. Always glad to see you here. Let me see here. Yeah, Hank, Bitcoin is a 24/7 market. Weekend gaps are not really a thing. Yeah, exactly. I mean, that's the CME as a gap is where he's talking about. But again, the market itself is a 24/7 market. So, but even if it wasn't, the fact again that you have those weekend gaps, they're nothing special. Let me see here. Let me get rid of these other idiots here still showing up. Let me see here. Kryptonia, what's up, man? You learned a lot from listening to me? Man, I'm glad to hear that. That's what it's all about, guys. Just trying to help you out the best we can do, Droid Doctor, what's up, man? Okay, so let's see here. Real quick here, what do we say here? Excuse me, I got a question. You guys have to excuse me today. I've got allergies kicking in from the weather change, so I'm kind of, my throat can kind of get just kind of a mess at times. Excuse me. 51 ETH says, maybe a macro question on all that is happening. Do you see the crypto market extend into a final move up, even when traditional markets are maybe on the state or on the start of possibly the drawdown of the ages, which seems to have already started? Can they move out of sync so much? Sure they can. Because the crypto market does not move because legacy markets move. They all move because risk is changing. Risk off, risk on, it changes back and forth. But it doesn't change at the same rate for every market. Bitcoin is this new, fresh, hip thing, right? Everybody wants to kind of jump in on it. Maybe people, there's talks of all this money that's been made, by these people, and so that brings a lot of money into it. And it makes people hold on and stick around longer than what they may do in legacy because everybody's kind of used to what legacy does, right? So sure, we can have that happen, especially if Legacy does this prolonged, maybe a larger wave 1 and 2, and then kind of taking its time getting down to 3 to break down below 1. And so it's basically just a sideways between, the all-time high and wave 1. And that would give potentially, the crypto market, would find itself moving up in that, But, at the end of the day, the one thing we have to understand, because I see it all over crypto, Twitter, and other social media, is that, the Bitcoin moves because the legacy market moves, and it's just nonsense, guys. It has nothing. One has nothing to do with the other directly. They're both moving in relation to risk on, risk off. But they're moving to their own degree. Remember, we don't say everything moves because the dollar moves. We just say that the dollar is kind of a proxy. It's kind of this signal of risk on or risk off. As the dollar rises, we're getting to a more risk off environment. And as we get to a more risk off environment, what that means then generally is that interest rates are rising, or likely to rise, is what usually coincides with that, which means the value of the dollar gets stronger, which means if you hold U.S. debt, U.S.-based debt, you have to repay in dollars, so your debt becomes more and more expensive. So if you're a company or a country or something, international company or a country or something, and all of a sudden the cost of your debt is rising, and this is important because you guys, if you've been paying attention, the amount of debt that has been taken on, especially the last couple of years, but over the last 10, 12 years, has been really just huge, right? It's all about credit expansion. And so now you have all this expansion into credit. Well, then the market and the economy stops going up, right? It starts reversing. You see that it's overheated. You've got, in addition to that, you've got these production and distribution bottlenecks. And then you've got extra money out there. You've got bottlenecks with production and delivery. And so that all together causes prices to rise even more, and the Fed has to step in and go, whoa, that inflation, the rise in those prices is getting up there, so we need to go step in. We need to stop adding money, so we need to kick this taper in, and now we need to kick it in faster so it's done sooner. Oh, and by the way, now we need to start raising interest rates, and now we need to start raising them even sooner, so we're looking at March for your first rate hike, right? Looking at 3 this year, potentially 4. And then, as if that isn't all enough, the Fed starts talking about, well, you know what, we're doing so great here, we might as well go ahead and start normalizing our books, which means selling off some of the stuff that they've purchased with QE. And so all that kind of goes in there. And so now if you're, like I said, a company or a country, God forbid you're an emerging economy, all of a sudden that cost of that debt becomes really, really strong. It starts putting a stranglehold on you. You can't do the things you want to do. You can't expand. If you're a company, you can't expand and do all these great things to deliver cheaper products or deliver products to wider swaths of people or, whatever. Because more of your money now is going to service that debt. And on top of that, if the economy's coming back, guys, guess what? Companies start going out of business. This is especially true for when you look at, so many, we talked about these over the past year and a half, 2 years now, these zombie companies and how they've been held up by the Fed, right? The Fed kind of buying their debt and whatever and holding and propping them up, and then everybody and their grandmother jumping in on it because they think the Fed's going to support them forever. Well, all of a sudden, Fed says no more, economy rolls over, these zombie companies are going to go out of business. That means people lose jobs, people stop spending money. So now these companies that are now faced with even larger debt servicing payments, a larger percentage of their of what their revenue is going toward debt payment. Now they're having less revenue coming in because there's less money to go out there, and so that's kind of where we're getting with everything. Just in the big kind of view of everything else. That doesn't mean crypto has to die today, though. Especially if people think, oh my gosh, crypto's going to make it when everything else is failing. So people continue to blindly put money into crypto. For those of us in there, it'll be great. It'll rise up a bit, and kind of take off there. But, there's always a reckoning, right? There's always some sort of reckoning. And so at the end of the day, if we're looking at a wave 4 here, we've got a wave 5 still to go up. But then we've got, that's 5 waves up, right? we've got a wave 2 coming off that. Or if it's 5 waves up from, 2010, guess what, folks? We're in for a hell of a wave 2, right? Because it's going to be a wave 2 off all of that from 2010 till this year, right? So a big potential downside for that. Now I know, I've talked about that. I think that gold has still got further to go there, probably below 1,000. Silver below 10.8 probably, which is in contrast to Goldman Sachs, which recently reported that they think their analyst thinks that they're going to have a super cycle. We're kicking off a super cycle for 10 years, a commodities super cycle. And so, we'll see how all that plays out. I could be wrong. So far my thoughts have paid out well though, but we'll see if it does continue down to where I think it is. But again, the way with this being a whole credit cycle thing and what's going on, and depending on how this all plays out, this could have some really interesting effects on commodities. I think either way, whether you're going to short them or long them, I think there's going to be a lot more volatility. So again, we like volatility as traders because volatility means money, right? We don't care whether price is going up or down. If you care whether Bitcoin price is going up or down, then you're not a trader. You're an investor. You want to see price rising. If you're a trader, you don't care if it goes up or down. You just want to be able to identify whether it's going up or down in swaths, in areas, and just ride along for part of that and, lock in some profit. And so, again, I get a lot of talk, from new people who say they want to be traders, but then their view is, Bitcoin, every time it drops, they get very upset. Well, because they don't want to be traders. They just want to buy at the bottom and just watch it go up forever. And unfortunately, it isn't, really the way it works there. So can legacy start, it's like some major reversal, and could Bitcoin still go up a bit further? Sure, definitely. Again, they aren't, Bitcoin and crypto doesn't move because legacy moves. They both move in response to their in response to risk. Whether the markets are risk off or risk on. But then because they're different markets, they have different levels of risk in them. Again, if you think about it, look at all the drawdowns and the pullbacks, everything we've had in Bitcoin over the last 10, 12 years. Often 60, 80, 90%, right? So it's a little bit more difficult to convince people that have been in the market for a few years or through, a couple of bull and bear markets to kind of get out. And so, that kind of helps support price and continue to push up as it does it. You don't have that same thing with legacy, of course. Let me see here. RM, what's up, man? Good to see you there. Man, all these guys with these stupid things. I don't even know what this crap is. But anyway. Crypto Monstar, what's up? He says, doesn't that low volume node at 52K look like a likely target for a dead cat? So here's what I'm looking at. So if we look at the volume on the way down here, everything else aside, I think, if you're looking to long, or if you're long, you be prepared for this area right here, right around 41,750, 41,800. And then up here at around 47,245 or so. Those are your two volume targets on the way up. I think regardless of what happens overall to Bitcoin, I think it at least makes to the first one and then to the second one. If you're making it through that second one though, I think you're good to go up. I really do. I think, the second one's the one that really matters. This red line is the most heavily traded price level in this area right here. So again, it's right there, around that, right there around that 47,245 or so, which is right there at the high volume node. Makes a lot of sense, right? But you get on the top side of that, and all of a sudden this starts acting as support rather than resistance. So you push out above, you come back, you retest this support, you continue up, you head out of there. Do I think dead cat at 52? You're talking about wave X here. I don't think we have a dead cat, especially not from right here. I mean, now I'm not saying it can't happen. I'm saying, me personally, I don't think that's at the top of our list of things that may be going on at the moment. So right now, what I have right now, just so you guys have what we're looking for. Last night, I kind of gave this to Discord, and we had it like an ABC kind of down here. And I said, okay, we had the purple line, we have the red possibility, and we have this green possibility, right? Because I was looking at potentially wave 2 to pull back further if the pivot didn't hold. So if we're getting the breakout above wave 1 here, then we're looking at potentially that wave 2 is complete here at this 15-minute pivot, which held as support. And that would give us a minimum expected wave circle 3 target up here at 43,375. If, however, it is to pull back toward this high volume node here around 35,367.5, if we're to get some kind of pullback to that, then that would give us a minimum expected wave 3 circle 3 target here at 42,700. And of course, if it was to pull back all the way down here to the S1 pivot, which is the 78.6 retracement of wave 1 here. It's right there at that S1 pivot on the 15-minute. That gives us the green one with the target being about 41,380. So, I mean, you try to make it as easy as possible, right? And so that's what we're kind of looking at. Now, we are breaking up out of here where I kind of moved. This morning, I moved this from ABC here because we had this move up. And then we had this potential high move and move down. So, wave B there. But right now, let me make sure. This could potentially be a leading diagonal here, so 1, 2. Let me just make sure this wave 3 here isn't the shortest. Let's see. There we go. And so if we measure out wave 3 here, wave 1 is more than, okay. And this would be more than as well. So we'd have to figure that out because this can't be a 1, 2, 3, 4, 5. Because this would be wave 3 and it is the shortest of the 3 waves. And of course you can't have wave 3 as the shortest wave. So what's maybe going on there? Oh. Well, Well, this would have to be the pullback here. So it has to be a 1 in this area because this pulls back lower than these other pullbacks. So maybe the possibility is that there is 5 waves in here. Maybe it's down here. Or, maybe just an ABC as a leading diagonal. But then we've got this. What I'm looking at is maybe like a 1 and then A, B, C here as a flat. So that gives us a 1, 2 here. We do have this one little wick right here. This one little wick move up here. Where maybe you could look at 1, 2, 3, 4, 5 here. And then maybe A, B, C here. So ultimately, we're going to have to assume 1, 2 here if we think that the bottom's in. So if that's the case, this ends up being a 1, 2 right here. That gives you a 3 up here at 38,401.5. And a 5 up here at 38,969.970. And so, that's kind of what I think we'd have to look at there. Let me see if we get this and we pull back. It gives us further targets up there because of the subdivision, depending on how far we pull back on that. Yeah. So we'll have to see how that plays out there, but it is possible right now that maybe we're getting this move higher up. But if we do end up breaking back down, of course, we're going to look right here at 35,367.5, and then down here at the 78.6 retracement at that 15-minute S1 pivot for that rally then up. Now, if we check out this other time frames here, let me see here. Let me kind of do this. Get rid of that. So, and let me get rid of this right here real quick off the off this bigger picture here. So we can kind of take a look at the pivots and what's going on there on them larger time frames. So right now, let's get this all done. Get that out of the way. Okay, so right now, as far as we go right here, as you can see, it's the 4 hour. We're up and overbought here on Stochk RSI. RSI has more room, but we are finding some resistance at this pivot here. You'll notice you've got this little bit of sideways up here right above it, providing resistance. So really what you want to see from a pivot standpoint is you want to see an impulsive breakout that carries above this swing high here at 39,300. So impulsive means larger candle spreads as it goes up. You'll see volume expanding as it breaks up through there. If you can do that and get above that area, then you've got a good chance that that bottoms in and you're heading back up there higher. Let me see here. Cordy boy, what's up? Real one, Hamid, good to see you. Let me see here. Merv checking in as well. Let's see here. Chris Rock, what's up, man? He says, yes, I keep hearing about the super cycle. Yeah, like I said, Goldman Sachs, they're the only ones I've really seen actually release something on it at the moment, worth maybe listening to. And definitely a possibility. But until it disproves what's been going on so far, I think, I'm going to continue to stick with my idea that it's heading down toward that 1,000 level gold anyway. And, silver, if gold's doing that, then silver should be dropping down below 10, below 8, around that area, heading in there. So we'll see what happens with it. Let's see here. What's up, Tony O? Investor loud and proud by the dip. Let me see here. Poke, what's up? It says M pattern in weekly time frame. So let's see. We're looking at this. M pattern, double top. I don't like it here because if you measure this out here as a target, it gives you a negative zero. It gives you a target of below 0, a negative number target. And so I generally stay away from pattern targets that take you below 0 because they don't work out, obviously, right? Because you're talking about a swing here from 28.8 up here to 69. So you're looking at what is that, 40,200, and so 40,200 from 28.8, is going to be 12,000, 13,000 below 0. So I'm not a big fan of that. But the one thing you guys can pick up here, if you're not well versed in Elliott Wave, is usually your subwave 1. So your first subwave of the next 5 waves up, that first subwave usually terminates around the previous resistance. A little bit before, a little bit after. Most often, that's where it's going to be. And so it looks like, a double top a lot of times, or an M pattern, as you were saying there. Also, if it's a flat, generally you're going to see, this would be wave A down, this would be wave up, wave B up, and it'll break out above wave A, usually just a bit, and then wave A will come back and drop down right below, or wave C will come back and drop down right below wave A as that flat correction, and then continue up. The other thing, of course, is a triangle. If it's a running triangle, you're going to see A down, B is going to break out above where wave A started, so that previous high, and then you'll have C, which will end prior to wave A, so it just kind of, consolidates here. And so there's, it's not just simply, there's a kind of like a double top M pattern kind of thing going on. When you understand, this is why I always tell people, man, you need to try, I think no matter what you're doing, the more you understand about Elliott Wave, the more successful a trader you can be, because it just helps you understand that price moves predictably. Now, it doesn't mean you're always going to get it right, but it does mean that price does not move randomly. There's been all these books in Wall Street, and trading over the years, over the decades, about randomness in the markets and whatnot. And I don't buy that. I've been doing this for a quarter of a century now. I like saying that because it makes me feel so old. I laugh every time I say it. But anyway, and anyway, so there's a lot of going on there, and instead, humans actually act pretty predictively, because humans tend to move, they have if you're in, what they call normal health, right? Normal mental health, what's normal these days anyway. But anyway, if you're in that, then you tend to stray only so far from that median, from that normal area. When you get really happy or when you get really sad, and you tend to bounce back up to that. It's like return to the median, right? Return to the mean, right? Mean reversion, right? And that's actually what we see, on our charts. So, I'm not one of those that buys the whole idea that things are random in the markets. We've kind of figured out what's going on way too many times to say that. You can't do it with any great consistency. You can't say that with anything when you're constantly with some bit of consistency, figuring out that where things are kind of headed overall. Now that doesn't mean you're going to not make mistakes, shorter term and stuff like that. Sure you are. It's part of the game, guys. But yeah. So as far as an M pattern goes, it's definitely nowhere near the top of my radar of things. Again, because that pattern target, which is the height between the swing low and that area between the swing highs there, that valley right there, you have to subtract that from the swing low. So you have to break it below, and that gives you your target. And it's so far below zero, it doesn't even make sense. So that's one of those things that I kind of look at that helps me see those things. Other things is, if you're looking at Wyckoff, guess what, guys? You've got your, if you look at this as a huge range, which I talked about back when we were in this area, look at the possibility that this is a preliminary support or preliminary supply up here. You've got your change of character going on this pullback here, leading up to your buying climax up here. And so within Wyckoff, you expect the range to hit its lows at the bottom of this pullback here, this area. So now you've got this range going on here. And so, unless it's distribution, you're either going to get a spring below it, or you stop right around here with an LPS. And so I'm actually going to look at those in just a minute here, guys. I've got a couple of charts to show you, based on some things you guys have talked about over the last, few months, I guess. And I said, okay, well, at this point, no, I'm not thinking about them. Oh, it's possible, but we're still got these other things to look for first. And if it gets down, toward this area here, I said we drop down below here. I said then we'd start looking at the possibility of larger wave 4 potentially playing out. So this will probably make Hank happy. Because I know he's been one of the really vocal ones about it. And so we'll look at that here in a minute too, with that. Telluride, what's up? MVA, what's up, man? Alan, sorry about that, checking in there. Let's see here. Peppy, the market breakdown, the newsletter. Yeah, I've been, I was the open rate on that was really dropping off. And so I have to look at what's, worth it in my terms of time that I devote to something, because that takes some time to put together that newsletter. And so I've been looking over the last few months here, some changes I can make to it, to maybe give you, because if you're not opening it, then it means you're really not interested. And I appreciate those of you that are, but, again, at the end of the day, I have to allocate my time properly. If I'm not getting a good return on that time, it doesn't make a whole lot of sense for me to do it, since I do so much of all this with TWC, by myself. Because really, I just don't trust anybody else to give you guys the same information. See the markets the same way I do. But yeah, I am actually working on that moment here. I hope to have something launched here, a relaunch of it, over the next few weeks. And so, we've got everything else we're doing launching as well. But I've got some changes I'm going to make to it to hopefully make it better, increase the content, hopefully the enjoyability of the content a bit more on that. So, yeah. Good question. Let's see here. Droid Doctor says, in general, how strong are supports resistances at high volume nodes in the VPR versus the support and resistance that you see on the chart where price tends to reverse? Generally, you want to watch. So your VPVR, guys, all that's telling you is where the market has been most interested in price on the information that you're giving it. So I've got this whole thing here, and as you can see, VPVR is largest right here, which just happens to coincide with the pivots. It works the same way, right? So really, that kind of area right there, that 48,000 kind of area, is where most of that volume has taken place over the past year. That's where most of the interest has been. Now, we use that to understand, okay, well, so if price is coming up to that, then the market's likely going to try and stop it, right? Because what that means is you've got a lot of selling going on over there, and they're going to want to protect that. And other people who miss the opportunity to sell at that level, to short there, are going to want to do so, right? Those who take in longs down here are going to look to potentially take profits in that area. So you've got a lot of change from demand to supply in that area. But here's the thing. If you break out above that, then instantly that area becomes support. And so the same way as you found resistance pushing out, if you break through it, you're going to find that flipped, and now people are going to try and support it. Same thing with your pivots idea, right? You break up through the pivot, you break up to the pivot, you start getting resistance, break out impulsively above it, now you're going to start looking at that as support. And so that's just the big thing about it. Your support and resistance levels most often align with these VPVR levels, these volume levels. Sometimes they don't. So just watch both of them. Yeah. Again, if you go up here to your what they call indicators, metrics, and strategies, now they put all that in there on TradingView, and you go to technicals and you go to volume profile, you can grab your volume profile fixed range, and that's what I have over here, right here. And you can check. You can say, okay, well, here's how it is over all this information, and on this move down, here's how it aligns up. And as you can see, that greatest volume still, that red line right there still comes, that's your POC, your point of control. That's where the most volume has come in this move down at that price level. And it still aligns right there with the overall larger price level. You can also see, though, it's pretty close over here, right around this, this 42,050 kind of area here, which is this other high volume node. So like I told you, as this rallies up, you're looking for your first real kind of volume test here of supply. And if you break through that, it's really going to be up here around this point of control, high volume node. But you notice as you bring in more here, that high volume node rises a bit there, right? So you're really looking for an impulsive breakout above this kind of area here, this 48,000, 47, 48, 49,000 area here. You're really looking for an impulsive breakout above that. If you can get that, and especially come back and retest it as support and then break out higher again, that's all she wrote as far as I'm concerned. You're most likely, heading up out of there. If you're looking in terms of Elliott Wave, again, it's basically this area right here. You're trying to get above this. We've got this as a WXYXZ, right? So right there, that higher W or that higher wave X resistance. That's added confidence to the idea that this 1-2 may be done and heading up. But you say, Chris, what else is possible? And I'm glad you asked. Because we do have, again, some possibilities we were talking about. So now, I gave these to Discord last week, and so I'm going to share them with you now. And so if wave 4, if that, that other count is what we're seeing at the moment because it has not been invalidated, right? And so now we look at, okay, well, what's the other possibility? What else could be going on? Now, unfortunately for Hank, none of these that I'm going to talk about are going to last through the end of the year. I'm not saying they can't, but I don't think they would, okay? But nonetheless, the same idea that there's this big range here, right? Again, looking at the idea that, as I mentioned, preliminary supply here, you've got your distribution range up here, you've got your reaccumulation range down here, right? Or in terms of this whole structure, you've got your distribution, reaccumulation, or accumulation, reaccumulation, distribution, redistribution, and potentially accumulation down here. Now this, one thing we can notice is during this range here, we do have volume dropping off. So that's your first thing that it's pretty good chance it's probably accumulation happening there, right? We can also know that within that, we do have a buildup of volume of demand in this area right here, which makes sense because, again, you had this base here, you have this base right again with it, and here you are kind of pushing down into this next one. So, of course, you expect to see it. High volume node, right? But now what we need to see is some rallying back up, right? So if this is to play, say, a triangle, we can look at potentially, again, like some of y'all like to look at this being an ending diagonal here, right? That would be 3. Now, I told you I've been having a lot of trouble with this right here because I'm going to tell you guys, everybody does their thing. I don't like truncated waves. I think that you can almost guarantee that there's a better count out there. And I potentially found one here, okay? So we can go with this as a 3, and then an ABC is a W, and then an ABC up here is an X, and then an ABC is a flat there for Y. So that gives us an A. Well, then we have to make a B here, which is an ABC, right? So maybe, 1, 2, and then 1, 2, 3, 4, 5 gives us 3, 4, ending diagonal, ascending broadening wedge here for 5. So that's A. B comes down as a triangle here, A, B, C, D, E. And then we have what amounts to 1, 2, 3, 4, and potentially ending diagonal here for 5 gives us a wave B. But then we would need to have 5 down for the flat. But for the triangle, we just happen to have an ABC or a WXY, right? So we can go with the count we kind of already have on our main count here. Same count, WXYXZ, right? And we can find that potentially having found support at the S2 pivot on the daily here. And then so if this is correct, then we're going to get 3 waves up for D, 3 waves back for E, and then we'll be done. If price continues to rally, though, above wave B here, this triangle is not valid. This count is still valid. So in either one of those, price is going to go up. So you don't have to know which one it is. You just have to understand that in both of them, the trend is up. And you just wait and see, okay, do we get 3 waves up and then pull back in 3 waves? Or do we get 5 waves up and we break out above the swing high? And so that's what we'd be looking for here, right? So this gives us accumulation range. And by the way, this is a large accumulation range here, almost a year long. No, 6 months, 7 months now. Coming in here so far. And so if this is a triangle that keeps going out here, it could potentially stretch into March. And that's important because March is the time we find out, are they going to raise rates, right? Remember, the whole idea is they might be raising rates early, and I think the market's starting to price that in. So if they don't raise rates in March, that could see a big boost here for Bitcoin. So, this could continue up through February into March to finish D and E. And then we get the disappointment the Fed doesn't raise rates in March. And so Bitcoin takes off, right? That's just kind of trying to figure out a narrative here of what could be happening there. The other thought is, okay, well, if it's not the original count here, the primary count, if it's not the triangle, then maybe it's what I was talking about, a flat, right? And so the flat starts out the same way up here. But like I said, then you got to get 5 waves down. And so in that, you're probably looking at this as a 1, 2, 3, 4, and then you get a 5. And that there should be a dip below the range lows below wave A over here. And so the logical target on something like that is the S2, or the weekly S1 pivot. Right here, 26, 261, 38. But it would just be a wick below the range low and right back up into it. That's what that would be. And then in something like that, we probably expect a strong, swift rally all the way back up. Because at that point, phase C over here, you've got your phase A coming down here, which is your stopping phase. You got phase B, which is your building of a cause. Then you have your phase C, which would be that spring right there. Or in the triangle, just a last point of support as I had on there. Phase D is your interior markup, so inside the range there, and then phase E is your exterior markup there. And so that could potentially still happen as well. As long as price stays above this swing low, though, we're one of those other 2 counts. If we drop down below this one, could still be a triangle potentially playing out, but you really have to give deference, I think, toward the idea that we might get that one dip down there to scare people out the last time, and then just kind of take off with all their money and head higher. So these are the 3 kind of options I think we see at the moment. I don't think the top's in. I don't think it is yet. There's too many things going on right now, but that could change as price, drops down through here. That could provide some different look at what's going on that says, okay, maybe this ends up being distribution. Remember, Wyckoff is not about anticipating. That's gambling. Wyckoff is about confirmations. It's about speculating. So we read the range as it develops rather than try and guess what's going on. So you have the possibilities here, and you have the reasoning behind them of what may make these things happen or what may not. So yeah, this is kind of where we're at. Should we play the short term, right? You bought the dip down here, right? You're rallying back up here. You've got your volume targets. You're kind of looking at everything else aside, right? If you're looking at Elliott Wave, you kind of zoom on in there. Zoom. And you try and figure out, okay, which one of these three maybe is it kind of following in there? Which, again, these are minimum expected wave 3 targets, so they could go, further beyond it. You keep in mind the fact that we have this descending channel here. And so an impulsive breakout above the EQ here where price remains above it opens up a target of the descending channel resistance. You break out of that impulsively, and then you have this pattern target of about 1,600, 762.5 or so above the point of breakout. Just depending on where it breaks out there, 16,400. Again, depending as you move down further here, this target gets a little bit smaller because it's a log based, and it's based on the height of your channel here. So we kind of watch those things, but really, in terms of levels, when it comes to Elliott Wave, you're looking right here at 44,453, and then you're looking up here at 52,100. In terms of pivots, locally, you're looking at this 1 and 4 hour pivot here. So if you can get a impulsive breakout above this, maybe comes back, rechecks the support, and continues up, that's a good sign that at least for now, you've probably got a bottom in there heading up. But then you want to zoom out to your daily, of course, and make sure where that one is. And so in that case, of course, you're looking at your S1 pivot, and then you're looking at your pivot. Now, again, if you can get an impulsive breakout above this daily pivot, not just above that, but really above the swing high right here by it. So that 52,000, what is it? 52,100. That's that upper wave X. It's the same place. In terms of pivots, you need an impulsive breakout above the pivot and that local swing high. You get that? That all but guarantees that you're heading up higher. Of course, now, it's the 25th of the month, so we've got another 6 days left in the month. So these pivots are going to change. Probably before we get to them. So we'll have to see where that daily pivot comes on the next one. In general structure, guys, in general price action structure, all you're looking at are these swing highs here. You want it, this is your, as you go up here, this is your first major swing high, right? Drops, pulls back, and comes down. So that's your first target. You make it through that. You're not looking at this one. This is a little one. You're looking at this big one right here. You get back above that, you're looking at this area right here. You get above that, you're looking at your swing high. So however you guys want to look at the market, those are the ways that you kind of look at it and go, okay, well, where are we at and what are we doing? You don't have to know Wyckoff. You don't have to know Elliott Wave. You don't have to know whatever, pivots or whatever. Whatever one you want to do, all those things kind of align to the same areas generally. So, all these different methods and techniques and whatnot, guys, they all lead to the same place. Something I've been saying for years publicly here. Because everybody out there wants you to buy whatever they're selling. And they've always got the next great thing. They've always got the best way to trade. But guys, you are not the same as them. You're not the same as me. Things may make more sense to you one way than another. But the great thing about it is you just have to stick with it and practice and get good at it. The problem with so many new traders, they come in and they don't take the time. They take a couple of days and go, oh, it doesn't work, and move on. God, you see that in crypto Twitter all the time. Hank can vouch for anybody that was around in 2017. You guys know it's like every week there was something new, right? ICP, support and demand, Elliott Wave, Wyckoff, and all this silliness. And it was so silly. It was so silly that I actually drew, and I've got this chart still up publicly, but I was looking at this as a large range here. I was looking at potentially the bottom here or this drop down below it, right? As we got to it. We're spending a lot of time here, so when I drew it, I was like, well, this is maybe the bottom here. But there's always a possibility it could drop lower, right? But nonetheless, this large range here, and most people on crypto Twitter could not wrap their heads around it because it was such a large range. And I tried to explain that, listen, when you zoom out, when you see this big, huge thing here, it's like Elliott Wave. If that's a 1 and this is a 2 here, right? I mean, it doesn't matter. It doesn't mean that you don't have smaller wave sets in it, but it means this is still on the larger time frame a 1, 2, or a 4 or 5, or whatever you're looking at, right? But for some reason, crypto Twitter just couldn't wrap their heads around it. Man, I caught so much flack for that, and look what ends up happening, right? But, again, that's what we saw with crypto Twitter. Is that like every week, every 2 weeks or whatever, they were changing to the next great thing. And nobody ever really took the time to just practice one, to just stick with one and learn how to do it and learn how to do it correctly. So if you guys think that you have to learn Elliott Wave, or you have to learn Wyckoff, or you have to learn volume price action, or whatever you think you have to learn, just understand you don't have to. Pick the one that makes the most sense to you. Pick the one that resonates with you, and then stick with it. Learn how to use it properly. If you can do that, guys, you're going to be just fine as traders. Once, of course, you deal with all the what do you call it? Emotions and stuff, right? And the impatience and stuff like that. But yeah, I hope this really hits home with you guys, because again, I still get so many traders that approach me and they're like, man, what's the best way to do it? What should I do? What should I do? And this is what I try to explain to them. But nobody else is explaining this to y'all out there. Nobody else is telling you this. Everybody wants to sell you one thing that they swear to God is going to be the next great thing, and you're going to be so rich so quick if you do it. Telling you what you want to hear, but it doesn't really help you any. Unfortunately. Block Tech, what's up, man? Good to see you. Let me see here. Is VPVR more useful on the full width of a 49-inch monitor? Everything's better on a 49-inch monitor, let me tell you. Other than your neck, because you got to do this. All the way across there. Hey, you know what, though? I told you guys back when I first got this, guys, probably about, 2 years ago? I got this big, huge, ultra-wide monitor, and I said, man, I'm thinking about getting a second one. I haven't got a second one yet, so. Let me see here. Let me kind of catch up with you guys here. LXT, what's up, man? I see you there. I've got the bag. What's up, man? He says your ability to weigh all scenarios and your composure in the market is super inspiring. Man, I appreciate that, man. But, I'm glad you guys see, that maybe you see that, because I'm not trying to get here. I'm not here to try to get you guys hyped up to buy or sell emotionally. I want you guys to be logical. I want you guys to understand that even if you miss a trade, it's okay. As a trader, there's always another trade, guys. Don't get locked into I've got to get the absolute lowest or highest price. There's always another trade. That's why I spend so many hours in TWC adding so much education and live streams and everything for our Tier 3 members, because the goal is just to get you all to recognize this and to understand how these things work and how you can manipulate them to potentially give you better results, or results more akin to what you're looking for based on your profile of what makes you who you are as a trader or investor. I don't want you all ever to think there's one great way to do it and that's all there is. I don't want you ever to think that nothing works because you tried it for 3 days. You kind of half-assed tried it for 3 days and then you said, oh, it doesn't work. I want you guys to be, there with just with the reality of it. Otherwise, you guys are going to be flipping and flopping and just, new fish caught all the time, right? I mean, you're not going to be able to get beyond, to these levels that you want to get to unless you change your understanding of what's going on. And I tell you guys, everybody that comes in as a new trader, we all think the same way. The reason why I say a lot of things that I know resonate with you guys is because I've been through it. And yeah, it was a long time ago, but I still remember it. And if you get through it and you become a trader that's consistently profitable over time, for 10 years, 20 years, whatever, you're going to remember it too. You'll never forget it. I don't know that I've ever talked to a trader, no matter how much experience they've had, where they've ever forgot what it was like when they first started. And before they actually got it, before they figured out, okay, my thinking is wrong coming in, I have to change it to this. It seems like everybody always remembers that the way it was prior to that and the difference that it made when you finally clicked. You're glad your scripts match what I'm saying there, Telltale? Forrest, what's up, man? He says, I'm thinking it's going to drop further or at least retest the low. Yeah, so like I said, it's a possibility. And if I did, I think, this is what we're going to be looking at. But even in this case, I don't see it as a as a top. I see this as an extended wave 4. And so the length of time that we're spending going sideways here means a much larger target as we move and break out. And I know that's one thing you guys don't want to hear. You don't want to hear, oh God, we're going to go sideways forever, right? But if we did go sideways forever, just know that when we do break out, need to be on that because you're going to be going up forever. Okay, maybe not forever, but again, generally your rally out of a range has a lot to do with the length of that range. Not always exactly, but in general, the longer that you spend time consolidating, you're going sideways, the better you're going to go on that breakout, or whether it's a breakdown, if it was to break down as well. So yeah. Weekly S1 pivot, as I said, is definitely a possibility, but as long as we are above this swing low, I think we look at either that primary count right there, or we look at that triangle count kind of going on there with that. Let me see here. Man, Hank, somebody said the other day they missed the days about 5 years ago trading in crypto where you could basically trade on any exchange and trade any pairs and not have all this worry that I know us in the U.S. have to think about, and a lot of countries now as well. And man, I could be honest, I could honestly say I miss those days as well. Those were fun days. Let me see here. Eric Quinn, what's up? He says, could this entire range be a running flat with a higher high made here in the lower 30s, or an expanding flat for a higher low made slightly below 28? Oh, you mean a higher low made in the low 30s, or because that wouldn't be a higher high here. You'd have to get up above this high here to be higher high. Let me see. Yeah, definitely go back in the stream and see the 3 different possibilities. It's the same things we talked about. I've just actually put it down on paper, basically, to say here for you guys to have visuals with this. If you're in Discord with me, you've got all 3 charts, live charts, and you've got access to all this, so you can watch as it goes out. As far as a running flat, usually a running flat, you're going to have a higher breakout for wave B. And then it's only going to pull back around 61.8 for wave C. And if it was to be a flat, you'd have to have 5 waves down. Even if this was to be it for a running flat, you still have to have 5 waves down here. I don't know. Do you get 5 waves coming down there? I don't know. I don't think so. I think this is much better as a series of 3s, potentially. But because you remember, wave C has to be on a flat, has to be 5 waves. 1, 2, 3, 4, 5. But yeah, generally, if you're looking for a running flat, your wave B will usually run up there like 131%, maybe even 161.8, like a wave 3 would normally do. And then you'll pull back 61.8 of wave A, and then you'll go. This one's pulled back 90% already on this, around that. And so it's kind of really deep for me to say I think it'd probably be a running flat. So if it's going to be anything, it'll just be a flat drop on below wave A here, and then kind of heading up, I think. Probably. It was simpler and yet much more complex at the same time. Yeah, I guess so, Hank. I don't know. The trading all works the same still. We don't see as much of the nonsense, I don't think, as what we saw. Man, 2017 was just so much nonsense. I mean, again, guys, if you've been following me for years, that's exactly why I started TWC, because of the nonsense. Pump and dumps were everywhere. Oh my gosh. You guys that have been around, you know that, right? Man, you couldn't go anywhere without seeing pump and dump groups and whatnot. It was awful. Make Hank happy and let this all last to Q4. I'm going to be honest with you guys. I wouldn't have a problem with this lasting to Q4. I would not have a problem. It'd be a bit boring, but you could still get pretty reliable shorts and longs along the way as it builds that range. You just have to be willing to withstand it. But man, if this thing lasted through Q4, holy crud, the breakout and then the target, would be crazy on that. It would be great. It would really be great. Diego, what's up, man? Is that you? Yeah, that's you. He says, I'm all for the larger time frame triangle count, and here's my narrative. Omicron is ending. This ends the pandemic for wave D. Fed will raise the rate soon for wave E, and then inflation subsides and no raise. Boom. Quite possible. I don't know that the pandemic will end. I think we'll just go into some sort of endemic thing probably. Viruses, guys, most often viruses tend to mutate into lesser variants over time because their goal is to replicate and survive. And if you're killing off your host quick and easy, then, as a virus, you don't last too long. So viruses tend to mutate into less serious variants over time. If any of you are epidemiologists, you can probably verify this with me. And then so you get these things that kind of last, and they become part of your every year life, unfortunately, after that. But they become a lot less significant than what they were because the virus itself has gotten to a point where it can survive out there. So, it kind of moves out of that pandemic, but it remains around forever and a day. Kind of. We'll see what happens with it. I don't like it very much, guys. I've had lots of friends, it seems like, going into either catching COVID at the moment, or I had one that just was in the hospital for a few days, and she was released though, so that's good. But yeah, lots of COVID kicking up everywhere. Now we got what, BA.2 here in the U.S. now. So yeah. Hey, TV Canal, let me tell you what, buddy. I'm going to give you one more chance here, man. You coming in here pretty rude the last few weeks of streams here, last month of streams. And I've kind of put up with it. But at this point now, if you want to keep being just disrespectful and just crude and rude, I will block you, man. We don't have any time for this, man. I know you don't like that I give you the realities of gaps because that's what you're living on. But, it doesn't mean to be as disrespectful as you've been lately. I can't, say enough how much just outright rude people really just disturb me. Life's too short to be that way. And I don't think it's a language thing. I gave it that at first, but it's getting ridiculous now. So, I'm asking you to be a nice person, but if you can't, I'll just have to kind of block you. And I hate to do that, but honestly, I don't have enough time to deal with that nonsense. So I hope that makes sense, and I hope you understand. Let me see here. Man, arbitrage on the exchange was great, especially during 2017 at those last few months. Man, we made a ton of money arbing XVG. XVG, is that what it was? Yeah. Between a few different exchanges. That was back, what was that exchange that went down? Cryptopia or something? That gave us a great arb on that back in November going into December, I guess. And some of our members even jumped in on that with us. Scott and I were arbing the heck out of that because you could send it so quick, right? Bitcoin was okay, but you could do that sometimes, but it took a little bit longer. But XVG was quick, man, like that. So you could buy it on one, send it to the other, sell it, get done quick, fast, in a hurry. Yeah, there you go. Cryptopia, yep, there you go, Mark. You know I was on. Let me see here. So anyway, that's what we've got here. Let me kind of get in here real quick, guys, at some of the other ones before I get out of here. There's you go, Bitcoin. That's the big thing. I think it's what you guys mostly come for, so that's why I want to spend some time on that. Give you some looks at that. Let's see here. We've got... Well, I want to look real quick here, man. Look at GBTC. This is really, I think, a great range. If you're trying to understand Bitcoin here, with its design here, I've had all this that I've already had set up back as far as September. Haven't done anything with it since. But as you can see here, volume again continuing to drop off all the way through this range here. We've got a dip below that looks like a spring to me. All that volume there, right back up. So your range is actually with what's it called here? GBTC. You actually have this better range, kind of like this right here. And so there's your spring right there. And so if we take the other Bitcoin charts off there and just look at GBTC right here, I'd say there's your spring. We're probably rallying back up now. That makes, the most sense by this picture here. It's a different kind of look to it. Because, again, it's not a 24/7 market and, it's not spot. But I think, again, looking at that price action and volume relationship throughout this, I think that becomes pretty, they're quite compelling. You got your lower high coming off here, so you expected the lower low. It just dipped down and right back up into it, spring. So we'll see if we can get that to follow up through. So, yeah, that's kind of interesting. Let me see here. We've got TLT right here, which are your long-term treasury bonds, 20-plus year ETF. Looking at possibly 1 and then a 2 done here around the 70.5 retracement. We rallied right up to wave circle 4. If we can get a breakout above that, that'll be the first clue that wave 2 may be complete. Further breakout above wave B triangle resistance right there around the daily pivot, the high volume node, the 23.6 retracement. That area right there, we break out above that, that's going to add confidence to the count, and that gives us a minimum expected wave 3 target up here of 175.62. If this is going to do that, that means generally we should expect the legacy markets to continue lower overall. So with that in mind here, here's the NASDAQ composite, again, the one we watch here. As you can see, we had 3 into 4. The update last night said, I believe 4 was done, and we're looking to come down. Sure enough, gap down at the open here. Trying to find some support at the S1 pivot. 30-minute time frame. You see we've dropped back out of oversold here, but got a bit to follow on Stoch RSI to head down. I'll break down below 13,370 and 68 here. Should signal that wave 503 is in progress toward 12,335, 62, kind of that area. Let me see here. Let's see. Here we go with these are the E-minis, S&P E-minis. By the way, guys, I had a member ask this at TWC, and so if you're wondering where do you find those futures contracts, if they're on the CME, they're usually like this here. They're a couple of letters, and then they're the number 1 and a exclamation point. And then you want to look at the continuous contracts. You'll get, if you click on it when it comes up, you get to choose between the month over month or the continuous. You want the continuous. But ES1 exclamation point are the E-minis, which is the S&P E-minis there. And they do have micros as well, which are smaller than the E-minis and whatnot. But same idea here. Basically, wave 4 completed yesterday. A breakdown below wave circle B support here at 42.65.5 is going to give you added confidence that that wave 4 is done and wave 5 is in progress down here to about 4090.75, 4090.75. Following along in with that, of course, we have the Dow. And with the Dow, all more or less the same here. The idea that we have wave 4 ended here, big move down, found some support at the S1 pivot, finding resistance around the pivot here on the 15-minute. Breakdown below wave B gives you at that 33,434 level. Will signal that wave 5 is likely in progress down here toward 32,390. With this move up, I don't know. Maybe we end up seeing wave 4 as a triangle here, so maybe A and then B, or A, B, C is B, D. So we could potentially see a triangle form there. But overall, wave 4 should be complete on all these, it seems like. If you get a breakout above wave 4, of course, it means it's not. And in that case, on your different ones there, look for the 50% level, retracement level is your next target. For the Dow here, that's around 34,791.5. But again, with the NASDAQ and the E-minis there, they're also at that 38.2 to get the pullback. So a breakout above that gives you the next target up there, the 50% level. Checking on oil here. There we go. Oil's interesting. I think we've got wave 4 done down here. We were looking for this breakout here above the descending channel resistance and that 1 hour pivot. Let's see here. I was looking for more of an impulsive breakout above it. Unfortunately, the impulsiveness came right here. Not really right here. So we want to kind of watch this. We want to see it now. Definitely take out wave B resistance here at 86.09. If it does, that gives us an expected wave 5, a 5, a 5 kind of target up here at $90.39. I know Wall Street's looking at 100. You know, wave 5 could overextend and head up there. But right now we're looking at that generally expected target right now. And then if it continues going on the roof, you know, we'll add on to that. If we do get this breakout above wave 3 and then it drops down below wave 4, that should indicate that wave 5 is done. You know, it could end sooner. The only thing I would suggest is to look and make sure it isn't just 3 waves up. If we have 3 waves up around that R1 pivot, a little bit above it, and then it breaks back down, it could just be wave 4 still in progress, printing a flat, right? ABC down for A, ABC up for B, and then 5 down for C. And in that case, we would expect it to drop down right here below this swing low over here when it does, and then we'd get that rally up for 5. So yeah, real quick here, continuing on, silver. Silver potentially looking at wave C of 2 in progress. Wave C will equal the height of wave A here at around 24.25. That's right there between the 50 and the 61.8 retracement, right there around that high volume node. So that makes it a likely target. So we're looking for a breakout above wave A to indicate that that's what's happening. And then, you know, we'd have a minimum wave 3 target down here at 22.37. If we can't break out above wave A and instead continue down below wave 1, that's going to suggest that maybe wave 2 ended right here at the pivot around that 38.2 retracement. And then this, so this was 1, 2, and then this is 1, 2, 3, 4, 5, 1, 2 here. So 1, 2 of that 3 heading down. So yeah, so I mean, that's kind of what we got going there. Real quick, I'll show you the euro since we've been talking about that a lot lately, since it's the opposite of the DXY, right? The euro looks a little cleaner. I've got this potentially as an ending diagonal for 5 of 3. Possibly could be 5 down here as a 1. But right now, I think it's just 5 of 3 right now, which means, and it makes a lot of sense because that, yeah, almost got that there. Let me see here. That swing low down there is 1126.33. So that 38.2, which is the first target we usually look for wave 4, is right there at the daily pivot. So, you know, that makes a lot of sense. The 50% is right here at the high volume node. So until proven otherwise, I think it's a 3 going for a 4 up here. I'm long right now from 1.12793, so I'm up about 14 pips at the moment, coming off all that. So we'll see how that plays out there. But again, you can notice that the that this current 15-minute pivot here is right here along with this this previous demand structure here. So, you know, that'll be, you might see a little bit of resistance in, you know, right there or just right above it there at that, which again would make sense for a wave 4. If we do get a wave 4 up here at 38.2, then wave 5 should be expected to run down around 1.22 to 1.2226. Yeah. And so as long as that's, you know, heading up, DXY is heading down. When that reverses, DXY will head up. In general, not always exactly the same move, but usually quite close there. Let me see here. Oh, let me see. What else is going on here? Hey, Bianca, have a great day. Let me see here. Just kind of catch up with you guys. Oh, you guys talk about Canada? It's beautiful up there. I still toy with the idea of buying actually buying a house up in the Upper Peninsula of Michigan, just right outside of Canada. But knowing my luck, I'd be on my boat and cross international waters there. And then you have all the Black Hawk helicopters coming down on me, all the Mounties riding in. I don't know, what are they on, Sea-Doos? I don't know. No, I'm kidding, not on Sea-Doos. But anyway, I don't know. I thought that'd be interesting. It is beautiful up that way, though. That's for dang sure, guys. Anyway, so that's kind of where we're at here. So, again, Bitcoin quite possibly on the bottom there. We just want to see some follow through higher, which, we're currently getting at the moment. Bigger picture is the better picture, of course. Zooming out a few hour time frames there daily. Seeing those kind of things going on. But you do have your options if it does break down. And that's what we kind of want to keep our mind open to. Nobody knows what's going to happen for sure. We just kind of, let price tell us as it goes. And so you have your validation levels. If it doesn't get through that and it continues down through the invalidation level, then you have your next targets down lower. That's what I always do. If it breaks down, that's what we're going to do, like I showed you here, right? Same thing I've done the entire way. Because I'm not here to convince you that price is going to do A, B, or C. I'm here to just say, okay, well, here's where we're at. So if it's going to go up, it needs to go through this area, and then we can feel better about it. If it doesn't make it there, I would be really cautious about going along with it, or, again, short the other way. If it doesn't break down to wherever level's needed, be kind of cautious until it does. So, your goal as traders out there is to definitely be as patient as possible. The impatience, the emotion is what you guys will find, if you haven't found already, is what loses you most of your money. Just trying, getting in before, because you're just like, oh, I can't wait, and you'll get in, and then it'll go the other way, and you'll either get out with a loss of money or it'll knock you out. You'll be like, dang it, I knew I shouldn't have got in. But you did, right? And you want to make sure that you don't set yourself up for that, because that's money that you don't have to lose. That's money you're making a conscious decision to quite possibly lose. So you've got a lot of control over that. Okay, guys? All right. So it'll be all interesting. So yeah, okay. Anyway, there you go. So that's it, guys. As always, remember, the only thing you control in the market is how much you lose. I definitely appreciate you guys coming in here and discussing ideas. That's what it's all about. As I've continued to say from day one, I'm not here to guarantee you price is going to do anything. And anybody that does, you need to just be careful about. If you're following big names out there who spend a lot of their time talking down about other people and making fun of other people, whatever, guys, you know what? I'm going to tell you, if you want to be a better trader, get away from the nonsense. That's, if that's somebody that should be trading more, not doing it. If they're doing that, then they're probably making more money off of you following them than they are off their actual trading. So, again, guys, the goal, I'm not here to tell you that I'm the only person you need to watch. I would never say that. But you need to be careful. There's so many people out there vying for your time. Just make sure that you choose the ones to watch, guys, the right ones. The ones that are going to pay off in the end. Or are most likely to anyway. Don't waste your time with a lot of nonsense. If you do, if you want to go back to high school, go back to high school. If you want to be a trader, if you want to be serious about trading, if you want to change your life, then find those traders out there. Some of them have big accounts. A lot of them don't, though. But find the ones who are serious about it, the ones who have experience and time and whatnot, and they can do that, okay? I hope you guys have an amazing week. I really do. I hope you guys stay safe, both out in public with this whole dang COVID nonsense and, in the markets, guys. Do your best to look for higher confidence trades. You don't have to take a trade just because there's a chance. You don't have to take a trade just because a signal pops off. Take a minute, look at the chart and see if it makes sense for you. It's okay. If you're going to be a trader, then there's always another trade, guys. Don't worry about missing one here or there. I'd rather miss one because I was feeling pretty iffy about it than take one that I felt really good about and it didn't pan out for me. Or worse yet, take one that I'm kind of iffy about anyway just because, the signal went off and there's a chance, and then lose that money that I don't have to lose, even if I'm using good risk management, because you still have to make that money back, right? Polyfarms, hey man, long time no see. Tacos on you, man. I love it. I'm a big taco fan, man. I'm down here in South Texas. I appreciate you, buddy. Thank you so much. Block Tech, I love it, man. Love to have you here. Hey, listen, you guys have a great week, like I said. I will be back on Friday, as always. Same Texas West time, same Texas West channel. There you go. I don't want to say the other one. Probably get me flagged there on YouTube or something, or Twitch. Anyway, guys, you guys be safe until then. If I see you in Discord, man, I'd love to do it. Remember, you can join us at howtotradetowin.com. But if not, like I said, make sure you guys come back on Friday. All right? All right, you guys. Have a great day. Have a great week. I'll catch y'all later. Take care.